if you've had credit cards for a while, you've probably had a credit limit increase at some point in the past. If you haven't already, you probably will if you're just starting out on this journey. Now what will happen, you'll get a letter. The letter will tell you your increase is going from X to Y, when it's going to be applied. But credit limit increases are as mysterious as they are appreciated by the people who receive them. Who gets them? Why do they get them? When do they get them? How do the powers that be decide who's going to get them? Let's go through all of this one thing at a time. Let's hit it. Let's start with the most common way that people get a credit limit increase, and this is through a batch credit limit increase CLI program. And what this means is a credit card company will operate a regular, sometimes monthly process where customers get selected for a credit limit increase using some relatively straightforward metrics. There'll be a few cuts, so for example, if your utilization is too low, you won't be selected because you're not using a high proportion of your credit limit. If your utilization is too high, you might not get it because there are signs that you might be in stress or have some issues with debt. There'll probably be a few other cuts based on your bureau profiles. For example, if you are currently delinquent, so if you've missed a payment on any of your other credit commitments, if there's any other warning flags out there, you probably won't get it. But if you satisfy all the different things and your internal credit score is good enough, you will get one of these increases. Remember that one of the things that credit card companies have to satisfy now that they didn't used to a few years ago is affordability. And the issue here is they use the best data that they can when they're making one of these decisions, and that will mean that they're using the salary or income that you provided when you first applied for the credit card. If that was some time ago and you're earning considerably more now, you may find not qualifying for credit limit increases because of that as a thing. You can usually go and find a part of your online profile to go and update that. It's hidden away. Sometimes you have to click through a few things. Make sure you go and find it and update it. If it's not there, give them a ring and see if you can update it there, because that can make a difference. The way a credit limit increase program runs is something a little bit like this. A team of people, analysts, will go and decide who should be selected based on a load of data, graphs, charts, lots of models being built as to which customers are good for the money and which ones are not. That then gets put into a system which in batch, one particular day goes and selects people according to the rules that the analysts have decided on. Those customers then get a letter printed, and the letter will usually be printed approximately 37 days before the credit limit increase will apply, or 67 days depending on the notice that the credit card company does. The reason it's that particular amount of time is they need to allow for the letter to be packaged into envelopes, provided to the mail provider, and then delivered to every part of the UK, and then the customer still have a 30-day notice after the delivery date, which is the minimum legal requirement. Many credit card companies actually give you a 60-day notice instead of 30 days, and the reason for this is customers can opt out of a credit limit increase over a 60-day window, even though the minimum notice is 30. And what that means is if you have a 30-day window and some customers opt out afterwards, you may run into some operational difficulties in recalculating things, and if their balance is already too high, there's a lot of difficulties there. So some companies choose to avoid it and use 60 days for everything. Typically, these programs are not specific to any individual circumstances. They use very high-level batch criteria. They just say everyone who fits these particular rules is going to get one of these increases.
There are rules.
And so what that means is some people in specific subcategories who may have a spending profile which the overall rules do not cover will miss out, and as a result you may not be selected. Nothing to do with your credit risk, nothing to do with anything to do with how you use the card in many cases, just because you're not fitting the program design that the overall portfolio has decided. Some credit card companies will actually advertise their credit cards as having a credit limit increase after a certain number of months. You'll notice some of the near-prime credit cards targeting people with bad or limited credit doing this a lot. Some other credit cards have also done this in the past, and this is more almost like not quite a contractual but a very much a promised credit limit increase. So this will mean that everyone subject to meeting very basic criteria should get it. And usually for these types of credit cards that happens after about 4 months. Now the criteria are typically very, very simple. It will be something like make payments on time, don't go over your limit, behave like you normally would, and don't be inactive on your credit card. As long as you're not using it as expected as any normal person would, you probably will qualify for that first one because it's part of the marketing material. So this credit limit increase is often treated a bit different if that is the case. Now, some of the more advanced credit card companies will do something a little bit different. And this is going to be an individual customer level credit limit increase strategy that will follow you for the duration of your holding that credit card and will be very exact and specific to your behavior and will give you credit limit increases based on that. This isn't very common even today. Actually, many companies still don't have processes that do this in this way, but some, especially some of the newer, some of the more technologically advanced companies definitely do quite a lot of this. And what will happen is they will monitor your behavior. They will look for what exactly are you doing with your credit card on different days, your spending patterns. They'll look for your payment patterns. They'll look for what kind of things do you use your credit card for, how frequently and how much do you repay on the credit card. All of those combination of things together with the data that every month they're getting from the bureau. So actually every month the credit card company will know that you are doing stuff with your other credit cards. They'll know what you're doing with loans, applying for other products, mortgage payments, all of that as well. And together they'll then design a bespoke strategy for you, and they'll give you credit limit increases based on that. Often there'll be a high level overarching strategy that these things will follow. So for example, in month 4 they might first consider you for a credit limit increase, and then they might do the same down the line every single month according to their strategy. Or in some cases it's a bit more complicated than that. Generally speaking, qualifying for a credit limit increase in these types of strategies is considerably easier the earlier on you are in your account life and the lower your credit limit. Now, some credit cards, especially the ones that are for people who are new to credit or for people who have bad credit, begin giving credit limit increases after 3 or 4 months and continue doing so every 3 to 4 months after that for the first 2 years at least. Others, especially ones that are prime, will usually not give you a credit limit increase until you've had the card for at least 12 to 14 months. So don't expect anything if you have one of these more prime credit cards, especially if the credit limit is anything over about £5,000. The most sophisticated of these credit cards will build out a whole model which will predict your spending pattern in the future. They'll try to predict the likelihood of you doing certain things with your credit card, the likelihood of you making certain types of repayments, the likelihood of you subscribing to this channel. Please do so now. It would really help. The likelihood of you being able to make the repayments if your credit limit goes up. All of these things, they will go and analyze your behavior to date and try to predict what you're going to do in the future and base the credit limit decision on that. Now, quite an unusual way of getting a credit limit increase is as part of a portfolio management program. And these happen quite rarely, but sometimes a credit card company or a bank will find them in a situation where their credit card portfolio is underperforming. And this may mean that their funding becomes more expensive or is restricted because they're falling outside the boundaries on their risk tolerance, or they might have some issues with the regulator who has stipulated that they have to operate within certain boundaries, or any other number of things. And what can happen in these circumstances is they'll go and do a portfolio-wide credit limit increase program to solve for this. Now, if you are part of this program, this can be your lucky day because quite often those types of increases are much higher than what customers would normally get because credit card companies are solving an urgent internal need and they're prepared to go quite far in order to solve it. What will usually happen is they will go and identify their best customers according to whatever criteria. It will not be part of the usual program. They'll have some special rules for this. They'll pick those customers and give them big increases. What this will usually do is take low risk assets, if you like, on their portfolio, so the best quality customers, the lowest risk customers out of the total that they have. They'll give them big increases in the hope that they go and spend against those increases and their balances grow, and as a result the low risk balances will begin outweighing the bad balances and so on. This will usually be good for several ratios that are used in managing performance and can be a very quick way to get there because lots of other metrics take time to mature. If you give somebody a big credit limit increase, they might go and spend it in the next few days. Things like increasing interest rates and other things take many months sometimes to yield any noticeable results. Now, here is a really interesting way that companies give credit limit increases. Most people don't know that this actually happens. It's called testing. That's right. Most credit card companies will run a testing program. Some will do considerably more than others and considerably more frequently. In fact, some of the more advanced, analytically capable credit card companies will run these tests as frequently as every 6 months, or have a reasonable proportion of the overall program every single month being part of a test, as much as 10 or 15%. What this means is two things. One, the people who are part of the test group will get a randomly assigned credit limit. And this has two components. One, customers who were eligible for a credit limit increase may not get one, although this is a very small part of the overall test usually. And customers who weren't going to get it may find that they do get one. And the people who do get credit limit increase might get a really random amount, which seemingly would be very different to what they would expect. So for example, people on very low credit limits might get a very low increase, some might get a very high, some might get somewhere in the middle. The reason these tests exist is so that credit card companies can build a data set from which they can understand what happens when they give different kinds of credit limit increases, so they can build their models on it. If they don't do this, there's absolutely no way of knowing what giving a customer a credit limit increase does to their behavior, to their spending patterns, to their payment patterns. And this is something that is permissible overall by the regulator for this purpose. So if you end up getting a very random, very, very high credit limit increase out of the blue on a credit card that you don't even use that much, you may be part of this test group. This testing will often show what happens when customers get an increase and how do they perform differently to when exactly the same customers don't get an increase. Here's a test. Go and smash that like button right now so that we see how well the YouTube algorithm likes this video. If enough people go and hit it, it really, really helps a brand new channel like us to grow. Please do it if you haven't done it already. I really appreciate it. Now, if you do get a credit limit increase, you probably won't know why you got it. In fact, credit card companies will usually be extremely vague about why you were selected because nobody wants to share that you had this particular score. There's lots of internal sensitive information. They'll typically just say, hey, your behavior has been very good and we have decided that you deserve more money. Please have a credit limit increase on us. In some cases, it might be obvious. So for example, in a bit where you were promised a credit limit increase through marketing and you did get it on month 4, that you probably will know why that happened. If you have a credit limit of £250 and after a few months your credit limit increase has given you an increase of £1,250 to a total of £1,500, you probably are part of one of these regular tests the credit card companies do, because that is far, far from the norm for any credit card company to give you such a big increase. But in most other cases, in most regular cases, you probably won't know. The good news is that many credit card companies actually rely on credit limit increases to make their products work. There are some credit cards out there today where if they didn't give these credit limit increases, they would financially be losing money. The reason this happens is because customers who show consistently good behavior can grow their balances and pay interest on much higher balances over time, whereas the customers who don't, who are more likely to default, not pay the money back, manage to then lose the company considerably less money in proportion. So that's how the dynamics of that thing work. The good news is that credit limit increases do happen for a great number of reasons. They happen quite frequently for lots of these companies, and if you do the right thing, if you perform well, your credit profile is good, and you do what you need to do with a credit card, make all your payments on time, don't go over your limit, all of these things, you're probably going to get credit limit increases over time. Please make sure you leave a comment if you've got a credit limit increase recently, if you have any questions. Make sure you subscribe if you haven't done so already, and I'll see you guys later.